Welcome back to another episode of You Feel Me? It's your boy Duffel.
Wah.
Jaroan.
Draymond John.
Josh.
Okay, so I just gotta ask this. Who is Draymond John? I was thinking like Draymond. Who
My
is
boy,
Draymond John?
Damon John, bro. CEO
Okay,
of
that's what
Fubo.
I thought.
You
That's
feel
what I
me?
thought.
If you know, you know, man.
Yeah. Bro, how
I
do I
don't
have
know
more
about that
culture
one.
than you, bro? That's
He
crazy.
don't know about the black investors, bro. He don't know about the community, bro.
You're right. I have no clue who that is. But hey, I see why you done that. Because today, our episode is going to be about personal finances with a little, I guess, combined finances. Because we had a topic on relationship and finances, but personal finances kind of tie in with that because you got to know how to, balance and manage, your house's money when you get into that role. But the first thing I want to get into is like the education behind personal finance. So I think we talked about a lot last week about how financial literacy isn't just you wake up and you know that, and it's not taught in schools, and I feel like it should be. I don't even think I didn't even learn in college, much about financial literacy other than like going through things myself, but never educated, personally. So I just want to ask y'all, what are things that y'all do or have done to learn about financial literacy, and where did you start?
I'll start.
I can go ahead
Oh,
and. Oh,
go ahead,
go for
Will.
it,
You
Josh.
got it, Will.
No, you got it, bro. You got it.
All right. I would say that now I talked last week about how I'm getting engaged, and that kind of just set me on the trap of wanting to do better with money, just because, um, obviously I love my fiance and I'm very proactive in our relationship. So I put us in this, you know, premarital class, and one of the first weeks of the topics was finances, and I'm like, yo, this is a marriage course. Why are we talking about finances? And our pastor was just saying how finances and money problems is one of the leading causes of divorce. So obviously, it's very important to be on point and on the same page with this topic. So that just kind of sent me on this quest, just because how much Brittany means to me, to learn as much as I could. But I would say reading books is a phenomenal way to become financially literate. There's so many great resources and authors, and it's like literally reading someone's life story who's been financially literate and financially successful, like uh, how they manage their money, and just read different ideas. So it helps you bounce ideas off each other. And then going forward, one of just personally the course that I took that I probably learned the most was it's called Financial Peace by Dave Ramsey, and it just basically lays out the whole blueprint about from investing to saving, uh, all that in one, insurance, and it just kind of gives you a head start, I feel like.
Go ahead, Wall.
For me personally, I think it's cool that you really wanted to take on more financial responsibility from getting engaged. For me, it was more of me getting my first job and like really not wanting to work, honestly being lazy and like being really sad and depressed about it. So that's when I started looking into financial independence. So basically, like being able to position yourself to where you don't have to work for money, like your money works for you, type of thing. And from there, I didn't take courses, and I hate reading. So I usually use Reddit, which sounds like kind of stupid, but I think it's cool because like you get real opinions. Well, I assume they're real people, right? Real people's like opinions and their life, like what they've done, what they've gone through, and not only that, but they explain it in plain English. That's like one of the nicest things to me about like blogs and like social media forums, things like that. It's all like very simple to understand. Someone will break it down for you in a way that a 5-year-old can understand. So yeah, I suggest just using the internet mostly, and that's what I've done, and I feel like I've learned a lot from it. And then once you kind of have like some sort of basic background, then you can start reading and understanding maybe the more complex and difficult things. And that's kind of how I've transitioned.
Jaron, Keandre?
Jerry, you want to go?
You got it.
Forgot
Uh,
where I muted it.
for me, I had just wanted to start building up like my credit, and that's something that wasn't really explained at all, or how hard it was to start building up credit. So I just started looking into, like Wall said, Reddit, a lot of Google searches. I was watching stuff on like YouTube and whatnot, just to find out as much as I could to be able to get credit and start building it up.
Jaron?
For me, it was more so, I guess, trying to understand now a person who comes from like not making a lot of money in high school and college, and then getting a little bit of money to me, how to manage that, how understanding like what I should do to better myself for the future, because I think generational wealth is something that I want for my my family and stuff like that. And I think that's how you build generational wealth: learning about finances, learning about money, learning how to manage your money, learning where to put your money to make it grow outside of like just a regular savings account. So I appreciate Walt for putting us on to certain things, and outside that, just investing in certain things. So yeah, just for me, generational wealth is the reason.
I'll go next. Well, last. I guess what really made me like want to get into like being financially literate, and I'm nowhere near as smart as I should be when it comes to finances, and I'm lazy when it comes to finances too. But one thing is me and Jaren's dad like I feel like he taught us or gave us kind of life lessons at a young age about money and finances, and that you don't want to be broke, you don't want to put yourself in a hole. And I think that was the biggest thing, just don't put yourself in a hole. Like you'll be all right, but what you don't want to do is put yourself in the hole as far as like credit card debt, you know, you get like a bonus or a raise and you spend it, and you're spending fast money and everything like that, and you're living paycheck to paycheck when you really don't have to. So just being smart about those things. And the tools that I've used is my friends. Like I learned things from Wall, I learned things from Josh about different financial topics. So I use my friends because like I always say, if I don't know it, Wall knows it. So I always go to him about stuff like that. And so yeah, I use my friends, but I know there's more tools out there, and the internet is a big thing. They have YouTube, so if there's something specifically that you're looking at, mortgage, car note, retirement funds, hey, YouTube, go to YouTube, and after you watch the video you want to watch, come back to You Feel Me and watch our videos. But yeah, use social media. I mean, use YouTube or the internet just to go about things. But the next thing I want to talk about is me personally, I would say me and Jaren's growing up dynamic, and not just to get into like too much business, but I lived two different lives. I struggled on one side, and I didn't struggle on one side. And I would just say my parents weren't together, so I leave it at that. But I guess living paycheck to paycheck. Like I said, one side I had to do that, one side I didn't. But I would want y'all take on the steps y'all are taking not to live paycheck to paycheck. And well, I guess that would be the main question: is what steps do y'all take not to live paycheck to paycheck?
I'm gonna go first on this one. For me, I guess understanding how much money I have coming in, understanding my cash flow, understanding the income, and then also understanding how much money I want to save a month. So then understanding, like a big thing for me that I've done recently, getting an apartment that's a little more expensive than what I'm paying now. So like understanding, how much money I'm spending on certain things, like even the little things, like for instance, like DoorDash or getting my hair cut or something like that. Like everything, understanding how much money I'm spending. Because the easiest thing to me about finances is basically budgeting, because that's fiscal. You can understand, that's money you have, what money you have coming in versus how much you actually have coming out. So that was the biggest thing for me. Just understanding budgeting, understanding, I want to save money, how much I want to save. I'm understanding, how much my bills are and if they could increase or decrease or whatever. So yeah, that's a big thing for me.
Josh?
Um, I would say that preventing living paycheck to paycheck and also getting out of living paycheck to paycheck is kind of similar as far as having a plan. And I think Jaron hit on the nail with the budget. And a lot of times that scares people, the B word. And I think if you look at it in the right light, it can be the opposite as far as if you budget, that gives you the freedom to spend money on what you want to, if you do it correctly. So the way I look at it is pay yourself first. Most people want to go buy their new Jordans first, pay their rent, do all this, that, and then the last thing, oh, if I got anything left, I'll put that in savings. No, when you get your check, invest, save, pay your bills, your living expenses. I like to call it your four walls, food, shelter, water, then go out and have fun and things like that. But that's really the main thing to me. I think paying yourself first, living below your means, and budgeting. And with budgeting, it does take time. You may mess up and you may be off on your groceries by $200, $300 the first time you do it. But stick with it and you'll just get better and better.
Keandre?
For me, I just gonna keep it like super simple since I'm not as financially literate as everyone. But I would say Josh hit the nail on the head. But like living below your means, I feel like a lot of people put themselves in situations where they get what would be known as like luxuries first. Like the newest pair of shoes for whatever the start of school, or maybe like a lot of subscriptions. I know subscriptions kill a lot of people, where they don't realize they have Netflix, Hulu, Amazon Prime, whatever. That's like $50 right there. That's coming out of your pocket each month. So I would say, man, really manage your luxuries. You don't always need the newest pair of shoes. You don't always need like newest pair of clothes. You don't have to go out every weekend. Um, Eating out is a big thing. I know people who live paycheck to paycheck. Usually they have to grab quick meals because they're on the go from like one job to the next, or just want to get sleep. So you grab like a quick meal from McDonald's, Whataburger, whatever it is. But like that's $10 to $15 you're spending a day. You add that up, you're spending more than 300 a month on just that. So like really, like Jaron said, budgeting, make a plan, figure out what you want to make for the week. It doesn't have to be something crazy. Chicken is very inexpensive. Rice is inexpensive. Just uh watch your luxuries. Watch what you really focus on spending your money on.
Well,
I think that's a really good point. In general, to like watch what understand where your money is going, and then like can you make a proportion that to how much money you make? Because at the end of the day, if you make a lot of money, you can afford to do stuff like that, obviously. But I would say like even the smartest people would try and cut corners, and that's my biggest thing. I try to cut as many corners as I can in terms of spending money. Like, so for example, if I like eating out, like Keandre said, you need to be careful about how much you eat out. So how can you mitigate the cost of eating out? How can you find the best deals available? If you can find the best deals available in all aspects of life, you can afford to do more of whatever that is, whether it's eating out, buying shoes, buying cars, playing video games, all of that. So that's where my focus is. Um, as far as living paycheck to paycheck and avoiding that, circumstance, I would say doing your research online to cut corners as much as possible, because you'd be surprised by how much money you can save while still doing things you enjoy. There are exceptions, and some things are going to be expensive no matter what, like traveling. Um, but I think if you understand where your money is going, creating that budget will go a long way for you. And obviously, everyone should try and get more money.
I definitely agree with that. And I think y'all all said exactly what I wanted to say. And I think Keandre would. I think you the one who said it. About like, or Jerry might have said it, but you talked on it with living below your means. One thing I want to add to that is basically knowing what to sacrifice. As far as for instance, like you might not get the latest shoes, but maybe you want to eat out a little bit more, or maybe you want to eat at home so you can get the latest shoes. So knowing what to sacrifice to make your money work for you, and I would say stay within that budget. And like Josh said, you might mess up. I done messed up a couple times, been off by a couple $100, but I budget every 2 weeks, and I should do it more. But I'm at a point where I really don't have to watch my money as much as I should. But making sure you have that budget and sticking to it as much as you can. And for instance, like you might think that you need this for some type of appearance, but not caring about that appearance and knowing what's best for you. And another thing I want to say is try not to dig a bigger hole for yourself. For instance, like I know in the past, I know some people who they are broke, but it's because they're broke because they're spending money on shoes, clothes, going out, whatever, instead of staying at home taking it on a chin, so they go get a loan. Well, now that loan builds up interest, so now you're in debt. So now your credit is bad. So now it's just a never ending loop of negativity that you go through when you make those decisions. So I would say the best thing is try not to make those decisions. Now I understand if you don't have a car. Now how you gonna get to work? Hey, do what you gotta do to get that car. But once you get that car, make sure you go to work. But then that don't mean go get a loan so you can get the latest clothes or whatever else or something like that. So I would just say try not to dig a bigger hole, know what the sacrifice, and try to stick to your budget as best as you can. And the biggest thing is try to budget for under what a good point is, because there's always those miscellaneous things, and that's one thing my dad always told me. The ETC that you have in your budget. What if you got to get a new set of tires? What if your water heater goes out? Those things you need to put money back for just in case that something like that does happen for that month. You don't want to budget all your money towards not you thinking everything's going to be all right, because sometimes it doesn't. What if you get injured? What if you get hurt or something like that? So I would just say that's my tip on living paycheck to paycheck. And I told the guys, I was like, what can you say besides get a better job or whatever? But I mean, at the end of the day, like if you do want to level up, you're going to have to work to get more money, and maybe that's a different job, maybe that's whatever, but that's a different topic. But I would say like try not to settle, try to level up. You know what I'm saying? You never know if you get accepted for a job. Put your name in the hat. Don't be afraid to put your name in the hat and apply for those jobs or apply for that position, whatever else. But
one thing before moving on, just on loans, they aren't inherently bad, and you need like loans, or like your credit card is a loan, from your credit company.
Yeah.
So just for more information, you have to take those things, but just know to live within your limits. Your credit card isn't free money. It's, you have to pay that back at the end of the month. Pay more than your minimum. Try to pay off your bill. But like those are things you need to build credit. So that's one thing I wasn't taught, is that how important credit was. Because, if you're looking for an apartment, if you're trying to get a car, your credit will, get you lower payments, or maybe a lower security deposit. There's things you get with a higher credit score. So, parents, if you have kids, when they turn 15, 16, try to get them, I forgot the exact name of it, but there's a credit card you can get for your children so they can spend, and it's basically building their credit up. You pay that at the end of the month, so by the time they're financially responsible for themselves, they already have like a little bit of credit in their name. And, for people, adults, freshly 18-year-old people, try to get a credit card, maybe even get like a store card or something, that's still credit, and, just build that up, but don't spend too much. Don't get it and think you can spend $300 automatically. Just know your limits.
And one thing I want to say is for those parents that are going to do that, make sure you do it wisely. Don't be fucking maxing out your credit card in your kid's name. And now when they do get credit, it's fucked up.
So that's two opposite things. Yeah.
I'm just saying to make sure. Yeah. But one thing I did want to say is, and I think you hit it on the head, was, having credit. Like I didn't have credit, any real credit history up until like 6 months ago. Mm-hmm. And like, I had to go around certain things. Like, for instance, when I proposed to my fiance, like I had to buy the ring out of pocket because I didn't have any credit history, so I couldn't get that loan. You know what I'm saying? I had to pay it out of pocket. So I definitely would say is try to build some credit history. And like I'm pretty sure J Money and Jaron know our dads are brothers, and they always say, you know what I'm saying, you don't want to get a credit card because you'll spend it in it, you'll max it out. So the worst thing you want to do is get a credit card. But I will say, if you know you're financially literate, having a credit card at 18, so once you get to a certain age, and you do have credit history, is a good thing. But just make sure you do it wisely. And I know I was told, one key was you don't want to go over 30 to 40% of your credit card max, because that's when it'll start negatively hurting your credit score. I that's what I was told. I don't know if that's fact or fiction, or if that's actual numbers, but that's one thing you might want to look at, what you can spend of your max amount after each credit report, to know whether it positively or negatively affect your credit score. And the student loan thing about the loans, yeah, student loans. A lot of people are afraid to get student loans, but one thing I always tell people, like, that job if you're going to graduate, that job you get when you graduate, well, you'll be making more money even if you have to pay back the loans each month than you would if you don't go to college and don't have that degree and do something else. Now, I'm not saying go to college or whatever, but I'm just saying, like, if you know you want to go to college, for instance, my degree, I'm a computer science major. I got my degree. If I didn't get my degree, what I would be doing, who knows? But the tax bracket I'm in, even with having to pay back, loans, is different than what it would have been. You know what I'm saying? Like, so that's one thing I want to say is, like, don't be afraid of student loans.
I want to add this about credit scores. Just jump in real quick. My credit score when I graduated college was probably, I think it was like 610, which not horrible, but it's not good either. It's not like something that you want. So I built my credit up, so because my credit score now is like above 700 now, and that's really good. And what I did to build my credit up was I had braces. So what I did was I had a card I used to pay for my braces, and I just paid the card off, and I would pay more than my minimum. Like, I'll pay probably like 30 to 40 above my minimum every month. I'll pay it, and that really helped my credit score a lot. I don't know exactly how they work or whatever. That's just how what helped mine out a lot. And now I have a credit card, and I did the same thing for my minimum. I only made one big purchase on it so far, but it was over $1,000. And I pay above the minimum every month. I mean, I could pay it off, but I paid above the minimum every month because one thing I learned is every line of credit you get stays on your record, and they want you to have long long times of that credit. So basically, like, they don't want you to get credit, like a credit card, and then pay it off, because that'll affect it negatively even if you pay it off, because they want you to have like longer lines of credit. So I guess that just helps your credit score. It's kind of complicated to understand, but that's how it works. So yeah, so understanding credit is a big thing.
Well, the thing with long. Oh, you go ahead, Josh.
Yeah, I just wanted to jump in for a second. I think a lot of great points. Karen was talking about being under 30, if his credit, like your credit utilization score, like basically being under 30%. And before I get into what I was saying, I don't, like Jaron was talking about, I don't know if it's definitely good to pay off your credit cards, but I think don't pay it off and close it, essentially, like closing your credit, because then
That's a big thing.
Closing
yeah,
it, yes,
Yeah.
yes.
so it's not necessarily like leaving a balance on there, but paying it off and closing it, then you don't have any credit once again. But just kind of circling back, Karen was talking about was how I think our family was kind of telling us as we were growing up, don't get credit cards. Credit cards are bad for you. And I love credit cards personally. And I was in the same boat as Karen. I didn't get a credit card till I was probably like 24, so about a year ago. And I think if you use them wisely and effectively, it can be a huge benefit to your life. People talk about wanting to save money and like, oh, I'm not going to order soda and do this and that. But the biggest way is have a good credit score. When you go get a house, you get a low interest rate. You're saving hundreds of thousands of dollars, like at the most. But I mean, that's the biggest way to save money. I think big picture. But I do appreciate like what our family did. Karen was talking about, because if you aren't financially literate, or you're not responsible, it can be detrimental. And us as humans, we
Yeah.
are chasing that instant gratification. So most people aren't disciplined enough to say, "Oh, I've got $2,000 credit limit." They think I got $2,000 to spend. And no,
Mhm.
like if you don't have the money to pay it off, don't get it. And most people get a credit card, they're not disciplined enough to do those things. I heard this quote. It was funny to me, but it was like it's real. It's real talk. It's saying that most of us, buy things we don't need with money we don't have to impress people we don't like, and that feeds into the credit card game. Like the credit card game is, oh, I can give you this huge limit, you can get whatever you want. But that being said, like if you know how to use it and use it wisely, and you're only going to spend what you have to pay off that month, oh, I mean, it's a huge benefit.
Yeah. And oh, just to piggyback off of what you said, like I do appreciate what our family told us as well, because I'm pretty sure all our uncles said the same thing. But they didn't know, we were gonna grow up to be financially literate. Like I feel like I could have had my credit card at like 20 years old, and I wouldn't have went over my limit or anything like that or maxed it out. Just because I feel like I've been financially literate, but that's because of the foundation that, like, our parents laid out to us at a young age. I feel like they raised us well when it comes to financial literacy, as far as like not doing the bad things. Maybe not, the technical things behind it, but as far as not doing the bad things, I really feel like, they helped us out and laid that foundation. So yeah, I definitely, respect it and think that was great. But one thing I want to add, I don't know if Wall or Keandre, y'all want to jump in on any of that.
I was just gonna talk about a little more about credit. Like Josh said, it's about not closing the accounts. You don't want to have too many open credit lines at one time because that negatively affects your credit score. And you don't want to close too many accounts. You want to keep your accounts open for as long as possible, and you don't want to pay off your debt for like loans and credit too fast because the point is for it to, I guess, accrue interest to a certain point. If I'm not mistaken, I think Wall or Josh can correct me if I'm wrong. But when you pay it off too quickly, it hasn't gained any value. So you're not building up your credit, you're affecting it negatively. So, don't fully pay off something in one payment or two payments. Let it I guess accrue a little bit. But, just small implements at one time.
I'm glad you
Honestly,
said that. Oh, go ahead,
go
Wall.
for it. It just depends on, like, I mean, there's so many different kinds of loans, and that's another
Mm-hmm.
good point about credit score. If you're trying to build a credit score, to get it to where you want to be, like if you want an 800 credit score or like infinite, you have to take on different loans, like mortgages. Like Josh's credit score is probably gonna skyrocket way past ours, despite um opening a new account because that's viewed differently than credit card or an auto loan. The value of the different loans and diversifying is what helps you get from like 700 to the next level. So that's, I guess, a good point that I wanted to bring up. But the most important thing is not falling behind on payments.
Mm-hmm.
At its core, that's almost half of your credit score. Being late on payments is such a negative impact. And I've had that happen to me. I had a Victoria's Secret credit card for my girlfriend, and Synchrony, for whatever reason, the bank that does a lot of credit cards, they don't allow automatic payments, so I had to do it manually, and I forgot, and it was like a $20 payment, and my credit score dropped like I think like 60 or 70 points, and it came back, but it's just kind of annoying when something stupid happens like that. But
Mm-hmm.
yeah, and like I said, it's stupid. Like it was easily avoidable. But yeah, pay on time. That's the main thing.
Yeah, and I'm glad y'all all comment on his credit, because that's exactly what I was going to ask y'all. Give some credit tips, because I think that's a lot of people's question is like, what is credit? How do I gain my credit? How do I get a higher credit score? And like you just gave me some knowledge. Well, I didn't know that the different type of loans affected your credit score. I thought just having open credit and paying it and not being late was enough to let it keep going. I didn't know, different things. That's how I play the role. So yeah. Anybody else got some tips on, credit?
I would just add to Wall's story because he said like he got hit with a late payment, and sometimes credit cards they can give you late fees and stuff like that. And um, I've never paid interest or had a late fee or anything like that on my credit card, but that situation did happen to me before with Synchrony as well. It was actually for my fiance's engagement ring. And some people don't know, like if you call early enough and like you just call on the phone and just be like, "Hey, I didn't know, like this won't happen again, but can you waive this charge?" They'll like reimburse you
Hmm.
that fee, and if you do it early enough, it won't report to the your credit bureaus for your score won't be affected. And that's what happened to me. So like just like that was the first credit card I ever taken out. I didn't know when the due date was. I got hit with a late charge, and I called them that day, and they reimbursed me, and it didn't report to my score. So my credit score still says like zero missed payments. And some people are just scared to like call, and they don't know like you can do that.
One thing that I wanted to add to that is, I feel like you should probably try, not probably, you should know your credit information by the time you turn 18. Whenever that annual year comes after you turn 18, you should look into it. And then one reason I say that, for instance, and I was told this happened to a lot of siblings. Me and my brother's credit was together. So when I initially applied for a credit card, I got denied because my social security number was wrong. And I'm like, what? Well, how? And come to find out, they had me and my brother's credit history on the same account. So I had to call all three major credit bureaus to get it split up, which was a long process. And it is a long process because you have to send in like valid ID. Then they have to send you the whole entire credit report through mail. It can't be online. And then you have to call them and get them to verify it. And then you have to tell them like what goes where. And then you have to get them to send you the new one and validate that. It's just a long process. It took me like 2 weeks for each one. But yeah, as soon as you turn 18, go ahead and try to find out your credit history. You may not know what you have on there. Like for instance, I had a 2 year old doctor's bill that it the and I don't even I got it disputed and waived, so it didn't negatively affect my credit score after I got it fixed. But what happened was I went to the doctor and I was supposed to pay a copay, but they said they was gonna bill me later. Well, the billing service they use closed, so they got a new one. So they never sent me any mail or any bill for that. So when I saw it on my account, I tried to call the doctor's office, and they told me to call this number not in service. So it was nobody that answered the phone, like the billing place closed. So I got it, I disputed it and got it off my account. But yeah, that was on my credit for 2 years, and I never knew it. So that's one thing I would say. Try to find out your credit history as soon as possible. But moving on. What was it? Oh, okay. So these are a couple of things that I wanted to hit. Okay, so retirement savings. I know you know a lot about that wall. Drop some gems for the people.
Um, I would say kind of like what Josh said. Pay yourself first. The whole investing thing. Like for me personally, I max out my 401k every year. Um, so I try and max out every single investment vehicle possible. So like 401k, I max. IRA, I max. HSA, I max. Um, I start a 529 plan. Um, that's a plan for like college education or just education in general for your kids. It's an investment account. Um, if you have kids or want to have kids, you might want to look into that. I put some money there. I have a savings account. I have a brokerage account with my girlfriend. Um, what else? I think, and then yeah, it's savings account too. I think the most important thing is to just to do it. Like if you have the money, if you can live below your means, do it. Like it's very easy to invest. There are articles, there are YouTube videos. Essentially, you're just buying something and picking what you're buying might be the most intimidating part, but it's very simple. And most investing websites, they'll like have a list of funds that perform well and you can just pick from there. And honestly, like that's good enough. And you'll make plenty of money. I've made plenty of money off of my investments and whatnot over the past couple of years I've been working. Um, But yeah, 401k is a working is account most people get when they're working, retirement saving. And HSA is called a health savings account. Basically, you can use the money in it at a really high level. You can use the money in it to pay for medical expenses, but there's a long list of other things you can use it for. Um, an IRA is kind of like a 401k basically, but you can only put in like $6,000 a year if you're under the age of like 59 and a half or something like that. I already talked about a 529 plan. Um, I think those are the main like high level explanations of what each are. But honestly, the big thing is like focus for me at least. I want to retire by 40, like in my mid 40s. So that's the context that I'm speaking from. I focus all my money on that, and what's left over, I live off of. So, and that's another thing I wanted to mention from earlier. When you say live paycheck to paycheck, like I don't live paycheck to paycheck per se, but my bank account doesn't increase with each paycheck. I hover around the same amount of money at all times. So it's not like stacking my debit account. But what does go up are my investment accounts. And those, for me, that's what really matters. And in most cases, I would say that's what matters for a typical person too. Um, if you're making enough money because you deserve to be a millionaire and it's attainable. So I guess that's my biggest thing, unless anyone has anything specific to ask.
I
I
have a
don't have
question, but I'll
anything
wait.
to. You can ask after I say this. I don't have anything to add. Ask, but I do have something to add to. And one thing I would say is, Wallace said a lot of things in, Google will help you out with this. Search these things up so you understand. And one thing I will say, if you don't want to stack all your monies in a savings account, if like you plan to use that money for retirement, but you don't want to stack all that money into a savings account because it's not growing. It's just sitting there. So if you put it in a savings account and you use it when you retire, it's grow. Trust me, it will grow to numbers you won't even think that it was possible. So I would just say make sure look into that. If you put money back for retirement, look into a IRA. And I know most salary positions they have a 401k or some type of retirement fund through your company. So I would definitely say at the least, whatever percentage they match, make sure you put that percentage down at least. And if you don't do shit else, if your company has a 401k and they match something, put whatever they match in. Trust me, at least do that. Because like I said, when you retire, you will be surprised. And a lot of the websites that they use can actually show you, like, if you keep putting in this position, this percentage at this base salary, this is the amount of money that you're estimated to have once you retire. And the number is way bigger than you would imagine. So I would say at least do that. But you can always put in more or less. And I know talking to Wall, he told me, like, as far as like 401k, you can only put up to 19,000 or 19.5
19.5.
thousand. Yeah, 19.5 thousand a year. So and there's penalties, right, if you go over. So
Yeah.
yeah, just make sure you do your math correctly, and you get close to that 19.5, if not exactly, but don't go over because you don't want those penalties. But that's one thing I wanted to add. But go ahead, Keandre, with your question.
Well, you touched on it a bit there, but I was just gonna say, I think we have an understanding of it, but for people at home who's like maybe hearing this for the first time, the difference between your basic bank saving account and an investment account.
Okay, yeah.
Uh, Savings accounts, honestly, they're not really good methods of accruing interest. It's not really going to make you a lot of money. Like ideally, the best. So basically, when you're investing your money, the big thing is getting as much money possible into that account to accrue interest. And different investments provide different returns that you can quantify as percentages. Savings accounts, they usually pay about, like mine currently, when I first got it, I think 2 or 3 years ago, it was paying like 2.3% interest, which was really high for a savings account. But now it's like 0.9 or maybe 1% interest. To compare an investment, let's say I invest in an ETF from Charles Schwab. So basically, just an investment fund. Most of the funds I'm invested in average like 10 to 15% return on investment over a year. So when you do the math, it's basically making you 10 times more money, right? 10%, 10 to 15% versus 1%. So basically, you open up a lot more room to make money when you choose investment accounts over savings accounts. And that's why I have not a whole lot in my savings. 90% of my money is in investments. Um, Obviously, like Karen mentioned, you want to have some money just in case things go bad. You lose your car, you lose a limb, you get sick, whatever. So I have that allocated, but as I mentioned before, the core focus, if you want to get rich, as a working class, regular middle class person, is investment accounts.
Yep.
So just to put that in like basic terms, for like each dollar you put into your savings account, you are getting 2 cents added to that pretty much. It's less than that. 2 cents is, high. So like you put in $1, at the end of the year the bank gave you 2 cents. While an investment, you might have gained $10 more or something like that. Well, not 10 more dollars. Like if you put in $1, you might have gained 50, 60 cents. You know what I mean? And wait, what was the other? As what I was saying, so with savings account, are you able to actually pull that money out when needed without a um I guess
Penalty.
a penalty? Yes. And same question for investments. Like when are you able to actually pull that money out? Is there a limit on that time period, or how much you're able to pull out in a year, if you're able to pull out any at all?
So that's the one caveat about investment accounts, and anyone else can feel free to jump in also. I don't want to steal anyone's spotlight, but investment accounts, most of them, 401k, IRA, typically you can't withdraw from them until you're 59 and a half. There are loopholes, but it takes a little effort to exploit those loopholes. So that's the one caveat. But that's why when you think about putting money in an investment account, you should think of it as I don't need to touch that for a very long time. And under no circumstances will I try to. Otherwise, you'll incur penalties and pay more money, um, and really cut out the gains that you got from investing in the first place. Savings accounts, it depends. Most, it's like 4 or 5 transactions a month. So like I can withdraw 5 times from my savings account. So that's something to think about. For me personally, they won't find me, but if I do that like, I don't know, maybe 4 or 5 times in a year or back to back, they can close your account without telling you. So that's something important to note as well. That's a good point, Keandre.
One thing I wanted to add, but I'm gonna let Josh go first because I seen that he wanted to say something. Go ahead, Josh.
Yeah, I wanted to talk about both the savings and retirement accounts. Just starting with the savings. I mean, uh, you mentioned how I think that most people, you obviously need a savings account, but understand the difference between saving versus investing. To me, saving is 1 to 5 year goal and your emergency fund. So, everyone should have an emergency fund. If life happens, you lose a job for a little bit, or you have to go to the hospital, you don't want to be in a position where you have to pull from your investments. It's better to have that money in savings. And then same thing with short-term goals. So if you're saving for a house and you think you're going to be there, 3 to 5 years, I would encourage you to put that into a savings account rather than investment. Because yes, investment accounts are going to make you a lot more money, and the trajectory is always going to be up over the long term, but it is up and down. And you don't want to be in a position where you have to take your money out
Hmm.
at a loss, essentially. But with the retirement accounts, I mean, this is also, I think people get scared of investing initially, and they don't know how to do it. And there is a learning curve, but if you're something that you want to do, like you can figure it out relatively quickly. And Karen, what you said was awesome. I was waiting for someone to say that. At the very least, if you don't do anything else with investing, hit your employee match. Like that's free money you're leaving on the table if you're not hitting your match. Like I know people who were investing in their 401k and they weren't even doing it up to the match, so they're still leaving out money on the table. Like it'll be normally, 3 to 6%, whatever it is. Find out, contact HR, and make sure you're at least contributing that. Um,
Yep. And one thing I
Hmm.
want to add to that is, oh, I didn't know you weren't done. Keep going, Josh.
yeah, and then also like retirement accounts. In the past, it was this thing where most companies had a pension, and pension plans are going away. And if you don't know what a pension is, like if you work for a company a certain amount of time, when you retire, they'll essentially keep paying you a portion of your salary. Most companies don't have that anymore. So retirement is on you. Like it's on you to invest in your future. And I would say kind of the order is get your employee match. Uh, it's kind of a preference, but me, it's a definitely match. And then I would gear toward an IRA just because there's more options and things like that. And if you're really like, I want to invest, but I don't want to learn too much, you can just open an IRA and invest in what's called a target date fund, which is just like you pick the year you're going to retire, and it's a bunch of stocks and bonds in that fund, and it takes the thinking out of it, so you don't have to do too much. Say I want to retire 2055, you just pick that, and you're done. It keeps it simple. So there's ways that it can make it easy for those who don't want to learn too much but want to get started investing.
And one thing I wanted to add, when you were saying about like some people don't even put the match in, like y'all might think like, oh yeah, I'm missing out on money, but you missing out on maybe like $100 $200 a check.
Hmm.
But at the end of the day, that money that's 100 $200 now. If you look at it once you get ready to retire, like you gonna be like, damn, I'm glad I put in that extra percentage to match. Like I said, like, and I think that's one of the foundations that our parents laid for us, our family, is like that's the one thing they always say, at least put the match in. So again, I just want to, shout out to our family for giving us those keys.